Now let's go to Naspers. So we're talking about, of course, the South African-based, Cape Town headquartered multinational media giant. Its core businesses, of course, are Tencent, and Tencent, actually. That's all you need to say, which is a Chinese Shenzhen-based internet company which owns WeChat and a number of other properties. Of course, it also owns a whole slew of other internet businesses and e-commerce operations that we need to touch on. And then Multichoice, DSTV, the channel that you're busy watching at the moment, or the platform you're busy watching at the moment. Market capitalization, 920 odd billion rands. That's important. That's about $70 billion. So about a third of the size of Facebook. Price to earnings ratio 88.05. Dividend yield rather paltry, 0.25%. Let's go straight to the share chart. It topped out at about 2,500 Rand a share back in sort of September of 2016. Since then, it has settled back a little bit, probably mostly because of the Rand strengthening against the Hong Kong dollar. Well, the dollar generally, because that's where it derives most of its value, from that listing of Tencent in Hong Kong.
Yeah, not most of its value, all of its value. We ran the chart again this morning, and Naspers is, or Tencent, the stake in Tencent is worth 120% of Naspers' market cap, which means that their ownership in Tencent is worth more than their entire business
Which
combined.
Doesn't make sense, really. It's because what, South African investors or other global investors sort of put a bit of a discount on it?
Yeah, it's this emerging market internet kind of story. People really aren't convinced, and then the video entertainment business has been under a little bit of pressure, but it's still highly cash generative.
That's the Multichoice, Showmax, and all the other bits and pieces that they have, which, as you say, is cash generative and very profitable. So it doesn't make any sense, because you could value that at some big number and then you're getting it all for nothing.
Absolutely.
And what about the e-commerce businesses though? Because we know those contribute minus money, because they actually lose money on about $1.4 billion worth of revenues. They lose about 300 billion. So those are businesses that the management team is investing in, like Flipkart and OLX, and Takealot, on the basis that e-commerce is going to be a big thing in the future.
Yes, and it seems as if they're trying to, they're also happy to sell off some of these assets as soon as they start getting a little bit of traction in the market, and as soon as a marketplace opens up for them. I mean, these guys made a lot more money off of the sale of their Polish auction business Allegro than the market anticipated. Because the reality is, even though these things aren't profitable, they still have a value, because
and trade buyers like Amazon and so on is looking to expand its footprint.
And they'll buy these things even though they're not profitable. So
because there was rumored talk that Amazon was going to buy Souk as well, which is a sort of Middle Eastern based version which they have a stake in.
Yeah,
then
I mean, that
Flipkart.
didn't materialize. Flipkart's in India. It's the biggest online retailer in India. And yeah, I mean, they're doing a lot of interesting things with that e-commerce business, kind of mixing it up a little, with their Indian business being integrated with a company called Make My Trip. That's actually a Nasdaq listed or Nasdaq listed. Yes, absolutely. So they're doing interesting things in that space, and I'm looking forward to seeing how that part of the business actually evolves.
Because Bob van Dijk, the new CEO, came from eBay Germany, I think, and if you look at the management team now, he's recruited a whole lot of people that obviously either worked with him or at Shibstead, or people that he knows from Silicon Valley. So they're working on those assets. That's the principal development. Pony Ma, you know, he runs Tencent. He knows exactly what he's doing. The controlling shareholder, those guys are very, very strong, and that business is looking great. So one can expect great things. And then Multichoice, well, you know, continues to kick in the money, and then everything else just rolls forward. It's just a matter of time, in my opinion, before the full value of all of this comes to the fore.
Yes, and investors will get a little bit scared when they look at a 2,000 Rand share price, and an 80 times PE multiple. But when you look at it on a forward basis, it's on around a 30 times PE multiple, and that discount to its true value really is massive. And well, our investment case lies on the fact that that discount has to close, and eventually the market must place a fair value on Naspers.
So it's just a matter of being patient, taking time, but it's worth much more than it's trading at.
Absolutely.
Automatic hot.
Yes, automatic
as
hot.
big as it is, hot for sure, right?